We had Paul Kudowski on their show last night, regular guest on Bloomberg West, and he called the filing boring. I don't know about that. I mean, the business is interesting. The Twitter business is interesting, but it is somewhat consistent, and one of the consistencies are losses. So you have fantastic sales growth. You have consistent losses in the business. You have fantastic user growth. So when you take a sort of a snapshot look at this company, you've got, on a trailing 12-month basis, $448 million in sales, an operating loss of $93 million, $100 million, an actual nice, easy number to remember. They've lost $100 million in the last 12 months. And no free cash flow. That's the business at a glance.
Corey, this is what you're best at. What will be the frenzy to acquire shares? Isn't Twitter a must-buy for most every mutual fund out there?
Yeah, I mean, I don't know. I mean, it's an interesting technology company. I've never really understood technology investing, period, so I can't begin to sort of add Twitter to that, right? When you pay 40 times, you know, this deal may go out at 25 times sales if the numbers we're hearing are right, maybe more, maybe closer to 30 times sales, with no profits evident. So people who want to buy those kind of, I don't understand why Tesla is more valuable than Clorox. So you want to ask me if you should buy Twitter? I don't do that kind of advice. What I'll say about the business is they're growing users like crazy. And the user growth, the user numbers are just amazing. They've doubled users in a year. They're looking at 218 million monthly users. Their revenues per users have been dramatically increasing as well. Really impressive.
And much of it
even
overseas
as the user
as well.
growth has slowed down.
Yeah,
most of it overseas.
Right. Corey, the company had 32 pages of risks in its S1 compared to Facebook's 22 pages. You've seen all kinds of risks that Twitter laid out. What do you think is the most significant?
Well, I think the most significant risk really is the advertising environment writ large. So within the filing, they talk about other places where advertising happens online, whether it's Yahoo or Google or Facebook. But I think really, you know, let's throw in the New York Times, and let's talk about billboards, and let's talk about, you know, radio and all the places where advertising happens. The medium is new, and I think the most important thing to Twitter is how advertisers react to it and how they use it. Whether they find that it has the efficacy that things like Google has had, where you had advertisers try out Google, find out it was successful, and spend a lot more for the same kind of ads. Now the numbers within this filing start to suggest that the sales per user are increasing in every quarter, and that's really important, not just because the number of users, the user growth is slowing, but they're monetizing users at an increasing basis. It's an encouraging thing for a young business, but it's a young business, and that's really the question here: is can advertisers find the answers they need with Twitter users? Can they actually get the results they want?